Guys, what's up?
Hey, pretty good.
So I've got a couple things. I'm gonna try to make it quick, but I'll take as much time as it takes to answer any questions. The only reason I say that is I just threw some meat on the grill, so I can't fuck it up and burn it. So the first thing that I wanted to discuss for anybody that is day trading is, because there's a million things you can use this service for, but I would say the two most lucrative things are going to be there's three different folders there that I've included in the service. One is the speculative plays. Those are plays that I just determined should be good plays based on a bunch of research that I've done. Those plays are like 35-0 now. And I mean, most of them, I think the minimum any of them made was 50%. The majority of them made well over 100%. And some of them that was within 2 days. Some of them it was within a month and a half. I'm buying option calls. Usually I'm buying option calls 2 years out if I can, just because I can read on the charts that something's past its 50-day moving average. And when it's past its 50-day moving average, and you usually know that it's due for a run. So that's the ones that I'll buy and try to bag 100%. Between that service, there's another one that's called long-term option calls that's in there that I've included, and I keep posting when there's either a sell order or a buy order. On that one, the statistics on that one is that if you were to play every single play that comes out with an equal amount of money, it wins at a 78% rate. And on average, our trades were in them for 23 days on average. Sometimes we get stuck with one for 5 months or even all the way till expiration. But on the flip side, sometimes we buy one and literally the next day something happens and it goes up 150% and we just get out. So on average, it wins at a 78% rate, and the average gain is 55% every 23 days. For simple math, if you're to bet, what I do is I put $10,000 down on each of these, and I understand that's a lot of money to put down and part with. You could put whatever you want. Now, the issue is that you need to equally weight and always bet the same exact amount of money if you're going to play that service. And the reason why is if you go play if the very first one you play, you go and put all your money in it and it happened to be a loser, well, you're toast now. So you have to put the same amount on every single bet in order to get the statistics that I just told you. If you don't do that, I couldn't tell you what the hell you're going to end up with for the year. But for the last 2 years, 3 years actually, it's been, if you equal weight it every single time, equal position. And it's not going to be exact because obviously contract prices are always different, but you want to have a number and try to get it there as close as possible every single time. So if you do $1,000 on every single one, and let's say one comes out that's well over $1,000, then you would just skip that one and wait for one that's within your price range. Now your statistics are going to be different than the statistics that I just ran off, but you're not going to do bad as long as you make sure you use the same amount every time. The way that you do bad is by being inconsistent on how much you put down. If you put down the same amount every time in that service, you will make money, period. Like, I will refund your entire year worth of subscription if you show me that you put down the same amount every time and didn't make at least 100%. No, not speculative. This is on the one. Let me pull it up. I don't know if I can look it up. Yeah, let me see. This is on, where is it? Long-term options, rapid trades. Do you see that one? So like on that one, sorry, what was that, Ronnie? Do you see it, Ron? Okay, so every single time there's a play, I'll put it out on there. Unfortunately, because we just started this end of the platform and I switched it over from just being all text information. So since you guys have been on, we've had 1, 2, I think that's it. So we've had 3 buy orders on that long-term option service. And these were plays that you couldn't have got in on that say sell, only because these were plays before you guys were in the service. But as you can see, the last plays that we've sold, PTC, we sold for 36%. NVIDIA, the one that says flash alert, buy calls, and not NVIDIA, NVTA. So we bought that one on December 1st, as you can see. And if you scroll further down, you can see where my position is right now, which if I felt like it, I could sell, and that wouldn't be a bad play. So I bought in at 10,000. It's already up 41%. So I'm up $4,200. The average gain that we get on this service is 55%. But the reason why it is that is because many times we'll hit over 100 or 150%, and that'll take care of wiping out any zeroed out loss that you take, plus make you some more. So again, I can't stress it enough. If you don't put down the same amount, it won't work. So you have to figure out how much money you can dedicate to that service. And you have to understand that the most plays on that service that we'll ever have in play at one time is usually about 15. Sometimes we'll only have 5 or 6. Sometimes we'll have as many as 20 or 25, just because some might not be working out and we might have to hold them longer than we expected. But in the end, 78% of the time we win. Sometimes we got to hold them longer than we'd like, but we do, and they end up working out. So on that one, the basic numbers that I could tell you is if you do every single bet with 10 grand and you don't miss any and you stay 100% consistent on trying to put in the same amount, 10 grand on every bet, you will make $200,000 by the end of the year. That is what it has made for the last 2 years on our data. So even if you just want to play that one and you got the money to, like, who cares about day trading? Like, honestly, this money is like almost guaranteed money. Day trading is for people, for the most part. I mean, don't get me wrong, you can make a career out of day trading, so I'm not going to sit here and say that it's only for people that have a portfolio. But to have the least amount of risk on your portfolio and to build your money, you want day trading to only be a portion of your portfolio. Everything should be equal weighted. Eventually, when you get to that point, you're gonna want to sit there and allocate it and break it down based on your risk level, but you're gonna want to have like a portfolio that just has ETFs in it, which is super safe, and you know you're just gonna make money. If you go with one of my services, like I have an ETF portfolio service, in 1 year, usually ETFs will only get you somewhere around whatever the market gets. So normally the market's like a 20% gain, 22% gain maybe. On the ETF portfolio service that I built this year, it's made over 100%, which is insane. People would kill for 100% gains on their entire portfolio. And that one is super safe, very conservative as far as there being downside risk. Obviously there's risk with everything, but that is a very conservative play. So depending on your risk level, that might want to be a big percentage of your portfolio. If you're somebody that doesn't like a lot of risk, you might want to put 50% of your portfolio just into ETFs. Now, my belief and the data shows that if you are capable of managing multiple portfolios, you will make way more money in the long run, because the more darts you throw, and if you're just randomly throwing darts because you're like, I'm going to take all these companies, but you know nothing about them, well, you're going to get screwed. That's not what I do. I make portfolios that I read, I research, I know their books, I know how much cash they got on hand, I research their CEOs and their management and make sure that they're somebody that's had a track record of success. I look at who their original investors were and if they're groups, if they're venture capital groups or old CEOs that got money from Google or Amazon or whatever. I do my research to make sure that this is a company that I believe in and can withstand the future and is going to grow, and they have a major headwind of like a mega trend. Like for example, to me right now for the next 10 years, the biggest growth in my opinion, what I call mega trends, where the majority of the investment money will go for the next 10 years is going to be into housing, because we are building and selling homes at the fastest rate we ever have, and interest rates are lower than they've ever been. And because of Corona, everybody wants to get a house and kind of like not live on top of each other. So people are trying to figure out how to buy a house that are on top of each other in apartments. And the housing industry is just booming. People don't even realize that, but the numbers for the housing industry are better than they've ever been as far as how long a house is sitting on the market, how quickly inventory on new subdivisions is gone. It's insane, and it's not going to slow down anytime. My prediction is that 10 years from now, I don't care where you're at, unless you're in the middle of like not civilization, property value is going to double, in my opinion. I've already almost seen it happen here myself. I'll give you an example. The neighborhood that I live on, we moved out of Austin because we were tired of the city and being constant traffic and just being a bigger city, you start having problems. That's natural. You get more people in one place, you start getting gang problems or just different things that I didn't want to be a part of. So we left and we came out right outside. I mean, I could be downtown Austin in 15 minutes. They built a toll road from where we're at directly there. But since buying this house, which it's only been 5 years, and I've been saying this for a while now, like I didn't just come up with this now, but we bought our house for like $580. It's only been 5 years and it's worth almost $900. To double, it would need to be worth $1.6 million. I can almost guarantee you I'm going to get another $300,000 of equity in this house in the next 5 years. So property value will double in 10 years. So that's not a bad place to put money right now, is in some property. Another mega trend is going to be 3D printing. This whole coronavirus thing, what it did was it sped up what was inevitably going to happen, which is we need to bring production back here to the United States and get it out of being contracted out to China or Vietnam or all these different places where the reason why they do it is because they get free labor. I mean, the Chinese literally have Muslim slaves that are making the majority of stuff that comes out of China, so their overhead is nothing. Obviously, in other countries that are paying them, it's the same thing. Jordan sells a shoe for $300, and there's some kid in Malaysia that got paid 10 cents for the week to sit there and work 60 hours making shoes. So with Corona, it totally screwed up our entire production line. So there was dealerships that were shutting down just because they couldn't get parts. So people have realized now, and it's sped up the process of what would have happened. We need to make our own stuff in America, and we need to figure out how to make it cheap enough so that it makes sense that they can bring production back to America. The number one culprit of what's going to drive that is 3D printing. So 3D printing is going to be one of the biggest, fastest growing segments that there are, sectors that there is in the next 10 years, because it costs almost nothing to do it. You only got to have one person that can program a machine and 3D print anything. They're 3D printing. Elon Musk just used the first spaceship that had parts on it that were 3D printed that went out to go on that mission to, I forget what they were doing, but they just launched a rocket recently and it had 3D printed parts on it. And now they're able to 3D print homes. They're able to 3D print anything. During the pandemic, people are 3D printing masks, the gowns, the PPE gowns, you name it, you can 3D print it. So that's going to be another giant mega sector. Solar energy, that's another one. Solar energy is going to take over. You can make more money on it. There's not so much labor involved as there is in oil. You don't have to frack. You don't have to be in the ocean fracking or on land fracking. You could just be how you stick a battery out and you beam up a ton of energy in a little tiny capacitor that you can sell. So that's going to be another huge mega trend. Pot is another one that is going to be monster. Eventually the Fed will legalize pot, and the pot segment is going to fly when that happens. It's already starting to happen. I can see that it's bottomed. So there's really not any downside anymore to playing pot stocks. Like, it's not going to go lower. It's gone as bottomed out as it can. The only way it would go lower is if these companies were to go bankrupt, which none of them are. There's way too much demand for it. So pot is taking market share from what I call the sin sector. So casinos, alcohol, tobacco, all the things that I call the sin sector, pot's going to take a huge market share of that. So that's my fourth one. And as soon as the feds legalize that, like I said, it'll take off. It'll be monster. I've got long-term calls so as far out of the money as you can get on so many different pot stocks that I fully expect to make thousands of percent. Most of them are already up well over 100%, 200, 300%. But I've been long on pot for a long time. And it's starting to show with my options that are up well over 100% that it's happening. The very last mega trend is cryptocurrency. If you don't own cryptocurrency, you are hurting yourself. Crypto is replacing gold. Crypto is going to replace our whole entire payment structure. Crypto is replacing the platforms that most things are going to run off of now. Bitcoin will be worth 5 times what it is right now, possibly by the end of next year. In my opinion, it will easily be worth $250,000 a coin within 10 years. Like, without a doubt, I really think that'll be more like 5 years though. And ultimately, when every Bitcoin has been mined and they cannot mine anymore and it will be the scarcest commodity on earth, I think that Bitcoin will be worth about $1 million a coin in 2040, which is when every last Bitcoin will have been mined. So keep all those things in mind, and when building a portfolio, depending on your risk, that's how you build it out. If you want to have low risk and always constant gains, then you diversify the heck out of your portfolio. So with me, I've got an ETF portfolio, I've got a high growth portfolio, I've got a dividend portfolio, I've got an overseas portfolio, I've got a micro cap portfolio, a medium cap portfolio. I give myself a ton of chances to win because it literally only takes one play in your entire portfolio to make you rich. There's people that are rich off of owning Amazon forever. There's people that are rich off of owning Google forever. There's tons of people that are rich off of owning Apple and Oracle. The list goes on and on and on. So if you equal weight your portfolio, you don't just say, I'm going to buy 90% Tesla and 10% this. You're going to lose like that constantly. But if you put the same amount of money into a basket of stocks and you pinpoint different sectors and you keep it spread out like that, basically day trading should be a percentage of your portfolio. You can make more money in day trading than you can in any other portfolio, and I mean by a long shot, a long shot. But obviously you can lose money fast in day trading too, as I'm sure some of you have seen. One bad play, your money could be gone quick. On the flip side, one good play, you can double your money quick. So if you're just hitting a couple 100% winners and you're not taking any losers down to zero, you're getting rid of them as you can see they're failing, you honestly should never take more than about a 60% loss. If something's below 60%, odds are it's not going to work out. The other issue is if it's below 60%, if we're later in the week, I'm trying to teach you guys what decay is. Decay will kill your option. So if something goes, you could buy something at the beginning of the day and it just went up slowly all day, but it never popped. And by the end of the day, it could be up a significant percent. Say it started down 2%. Now it's up 0.5%. I mean, that's a pretty big move, 2.5%. Well, if it took all day to do it, your option won't even be worth any more money, or it could be worth less money. And if it's later in the week, on a Friday or Thursday, I mean, it could just be gone. So the other thing to think about is, why sit there in that decay? Just dump it and take your loss, and then look for a better setup. Because you could go back in on that same exact play, but maybe for 1/10 of the price that you originally bought in on. And then if it gets to where it was, well, now you made 10 times your money, rather than sitting in that play that's not working out and hoping that it gets back to where you just break even or make some money. That doesn't make sense. Bail on the play, and if you still like the play, look for a setup and get in at a way less price and bag hundreds of percent. Does that make sense to everybody, what I'm explaining on that one?
Yes.
Okay. The other thing on day trading is, when you start on day trading, what I do, I don't recommend for anybody unless you are extremely experienced and you have a ton of screens in front of you. I play all over the place. I play like a madman. As a day trader that's just starting, and even as you go on, there's plenty of people that make plenty of money and all they do is focus on one stock. There's people that only play the S&P 500 daily, and they've played it so long that they have a feel for the stock, and they can read when it's going to go up, when it's going to go down, and that'll be the only thing they play is SPY. Me, my brain is all over the place constantly, so for me, I do better when I play all over the place because it keeps me engaged. I lose focus easy if I'm just doing one thing and I get bored. For me, getting bored while I'm in the market is not good for me. But for most people, if you focus on less is more. It literally only takes one play a day to make your day. If you could double up your money every single day, which that's not going to happen, but I mean, just think about it. If you could double your money every single day, dude, you're going to be rich at the end of a year. Like, seriously. It doesn't even matter if you're playing small. So if you focus on less and you have position sizing, meaning that you're always playing the same amount, if you read the rules, it'll tell you you should have a set amount that you play every single time. Whatever that amount is, you should use maybe 20% of that amount to play lottos. Lottos mean they're really high risk, but they're really high reward. If you play only 20% of a normal play, 1 out of 5 of them is gonna work out, at least. And you can bag money on those things so fast. You can hit 1,000% winner, that 1,000% winner is gonna wipe out 10 losers that went to 0. And again, we shouldn't be letting things go to 0. The reason why it's a lotto is because there's a high risk of failure. It doesn't mean you should let it go to 0. It just means we see something that can be monster, but there's a high chance of it failing. So we go in at a much smaller position size, hoping that what we see actually works out, because it can be huge, but accepting that if it doesn't, we're okay because we positioned way down and we can get out long before the thing goes to 0. So position sizing and understanding how to play with the same position size every time, and then how to properly play a lotto, that's very important. That's key to your success. And focusing on less while you're day trading is more. If you just decide, like, you know, we get the main list of our same exact stocks every single day that we're looking at. But then, based on the other service that I have where we get on a conference call every morning, we look at like 90 different stocks in that one. And we will play all 90, never at the same time, but we look at a list of about 90 that we look for signals to play them. You don't want to be like taking every single play that I take. It gets overwhelming, and then you can't even like progressively lock in gains properly because you're looking at too many things and it moves too fast. So if you can, before the day starts, just look at what are the best things that you like, or when you read the notes, you can see like what are the top setups that I'm watching. Pick some out of there and just watch those, and that's it. And then don't even bother playing when you see me pick something else, and if you didn't read anything about it and you're like, no, I don't want to gamble on it, just skip it and wait until you see the setup that you studied. And if you want to take it early, I can't alert everything. I don't even play everything. There's plays that I'll miss. I could be looking for something, but it never set up while I go and enter another play. And I won't enter two right after each other. It doesn't make sense. So I might miss something that you've been looking for all day, and you see the signal that I literally alerted and said, look for this. When it hits this number, it's going to do that. Well, if that's on your watch list, pull the trigger on your own. You'll learn how to do that, dude, and you'll make so much more money once you learn how to pull the trigger on your own based on using my philosophy. If you don't use my philosophy, you won't make money. You'll end up losing. But the best feeling in the world is when you get into the exact same call that I call out, but you did it before I did. It's such a good feeling because you're going to make more money than I did, and it shows that you're understanding what to look for and to be able to make money doing it with your own skill. That feels great when that happens. Yeah.
Can I jump in?
Yeah, absolutely. Go ahead.
So I think like where I kind of like realized that I messed up was I was jumping in before the actual number. So like let's say that the number, like let's just say Tesla for example needed to hit 603, right?
And you were jumping in at like 600.
Man, like just prematurely.
Yeah.
And then then it would go backwards on me.
Right.
So just for like the people on the phone right now that are listening to you, you know, it's really important when he puts out those what do you call it?
Levels, support and support and resistance levels.
Exactly. The support level, right? So when he says like once it reaches the support level, it should go. That's probably what I realize is the most important thing is like save yourself some heartache and wait for that support level to reach that support level before you go in.
Right.
Because you're gambling now. You're gambling if you go in too early, you know.
Right. And you'll lose more than you make. When you hit one, you hit it ridiculous. But you'll lose much more than you'll make doing that. And I know this because I've done it before. I mean, that's how I used to bet. And I would hit some monster winners, but then I might give back the biggest winner I've ever had in a period of 2 weeks because I just start positioning different. I start chasing things. I start trying to get in early. I do all the things that I teach not to do, and that's when you start losing. If you wait for confirmation of it locking up a level, then that's the safe time to go in, and that's when you have an edge because it did exactly what you thought it should do. So you gotta wait for confirmation and have patience. And people don't realize that patience is one of the most important things in day trading. There will be days, I promise you, it'll happen, where we don't trade a single thing. And the reason why is because there was no point. There was no good setups. We're not going to go and risk our money for no reason.
The other thing I would tell people too that and I told myself really is when you're like you got to be careful that we don't chase the play that you've already been in.
Oh yeah, definitely.
I think that I did that. I did that a couple times because I mean I'm working and multitasking and day trading like I'm sure all of us are, right?
Right.
And then we get a signal and it's like, fuck, let me get in. And then I realized that oh shit, he's been in that call, you know, for 2 days now.
Oh yeah.
So be careful, like you know, like make sure you read the notes and make sure you're not chasing something that he's already been in.
Yeah.
Because it ain't gonna work out for you the same.
Yeah, that'll beat you up quick.
There's a lot of calls that you stay in too. Like you got runners are going on, or you got a quarter half position left, and I realize it's better to chase. It's better to go in when you're going in on the call or put.
Yeah.
Than after you've already taken out a 0.5% or full position or half position or 3/4 position.
Right.
You know.
Yeah, and a lot of people at the beginning they don't realize that at all, Ron. And when it's even worse is when it's like something that I'm playing for like say like 15 or 20 cents, right? Because it's like I could get in at 15 cents and it goes to 30 cents. I literally made 100%. It doesn't matter if I put down $1 or $20,000. If I put down 20 grand, well, I just made 20 grand like instantly. And to you, you're probably thinking, oh shit, it's only 30 cents. I'm going to get in. Well, there's a reason why I played it. And I don't expect everything to just go 5 billion% the minute I buy it. I'm looking to try to make 100% or more every time. That's my goal. So if I make 100% instantly, I've already made my goal, and then I might leave some runners, and you might be thinking, damn, 30 cents, that's cheap, I'm gonna get in. But I already took the money, and you're just exposing yourself now, because in order for you to make 100%, it has to go to 60 cents. And if it goes to 60 cents, you made 100%, I made 400%. So you should never chase, ever. If it got too far out, let it go. If it's within, my rule of thumb is that depending on your risk level, the most that I'll go in on if I miss something is about 15% out. So if it's $1 call and I say I got in at $1, the most I'm gonna chase it to get in on a play is like is 15%. So I'll do $1.15 to chase it to get in. After that, you're just opening yourself up for failure.
Church. So let's talk Tesla, man. So
Sure.
Let's talk Tesla, because what I've learned is like I'm knowing like Roku. I did good on that Roku play. I made money on the up. I got out and then made money on the put on the way down that day. It was pretty cool.
Yeah, exactly.
But Tesla, man. So life changing Monday. You're already in the 50s, you already got like 5 or 6 calls. You must be down right now because it went backwards on us a little bit, right?
Yeah, well, so at the beginning of the week, I had a whole bunch of stuff, and I had stuff from the previous week. Like, I've been long on Tesla for a while, different strikes in different weeks. So if I see something that I've been holding all of a sudden pop like 100, 150%, then I'll get out and I might go buy something else. I try to make sure that I'm always just using profits. So like last week, Tesla kicked my ass last week, dude. I think Tesla, I might have lost like maybe 10 grand on Tesla. But earlier in the week, I had sold off calls that were from previous weeks in order to buy the calls that I lost. So even though it looks like I'm down, I'm really not. I was using house money to buy them. Now, I should have never let those go to zero and swung them overnight. That was stupid on my part, and I would never suggest doing that to anybody. The only reason why I did it was because I knew that they were already paid for, and I was willing to take the risk because the reward was so much greater. Like, if Tesla pops, dude, and it runs 150 points, you could make thousands of percent. So to me, it was worth the risk. But to somebody that's just starting and trying to build their account up, it makes no sense to swing your calls overnight because you don't know what the hell can happen when it opens up, and any news can destroy it. Tesla is a super, super news-based stock. Any news can move the hell out of Tesla. Zoom is the same way. Zoom and Tesla move based on news. News can come out overnight, and it could be good news or it could be bad news. Whatever it is, it's going to move those stocks, and you don't know when news is going to come out. So again, that's risk level. You don't want to be in those things and expose yourself to a bunch of risk unless the reward is so high and you know that you've already covered it. So it's like, okay, is that worth the risk? It depends on you. To me, last week with Tesla, I've been eyeballing this thing to get into the S&P 500 forever, and it finally did. And there's a lot of things that I've been waiting for to happen, and it happened, and I just mistimed it. I know it's going to happen sometime this month. Like, it's going to. That's why I have calls week in and week out on Tesla. So I'm willing to take the risk of coughing up some money in order to make sure that I don't miss that 100 and 150 point run it goes on, and I could literally wipe out any loss I've taken on Tesla for the year damn near. So I'm willing to keep risking coughing up some money to keep chasing when this pop happens with Tesla, but I should be much smarter in every single call that I lost money on. At one point it was up, and I wasn't PLGing on it because I was waiting for the monster pop. That was the total wrong way to play it, and it's not how you should play it, but I did it based on my risk level. My risk level, yeah.
What I realized is that on Tesla, it does a dead cat bounce a lot.
Oh yeah.
And if you don't have a strong stomach, fuck, man, get out of it. And I realized like I was in that call on Monday, and then Robinhood started tripping when it shot all the way up.
Oh yeah.
I was like, oh my God, it went down. I don't know, but I'm just letting you know,
Yeah, and so and that's something you got to learn too. Is you start learning your stocks in the way that they act. Like I could tell you off the top of my head how Tesla acts. I could tell you how Zoom acts. I could tell you how Apple, Shopify, Boeing, Google, Amazon. I know how these stocks act. For instance, Tesla and Zoom. Anytime they make a huge run, they're going to have monster pullbacks. They do that because there's so much volume in them that they know there's a bunch of people that are going to get scared out by them selling them off and driving the price way down just so that they can go in and buy them and get them because they know what it's about to do. And they go and scare you off and then go buy them for hella cheap. And the same call that if you stayed on, you might have made 100% on, they go and buy it off of you for half and they make 400% on it. When it gets to where you would have made 100, you straight up lose half of your call and they make 400%. So you have to know what you're playing and how it acts and be ready for it. I'm always ready for the pullback on Tesla and Zoom, and that's why I always play multiple contracts on them and I sell right as it gets into a resistance level, because I know that with those stocks, if it doesn't break and hold that resistance level, it's probably going to pop straight back down to the lower channel and test if it can even hold there. With Boeing fails a lot, and I know that. So with Boeing, I constantly take my progressively locking in my gains. I do it way faster because I know that there's a chance that it's going to fail fast. So I've got to lock them in quicker. And once you get to learn these stocks, you know these things and they help you out with trading them. Shopify is the same way. On Shopify, you can make a lot of money on because it goes on some monster runs, but it also fails a lot. And when it fails fast. So I know to lock in gains faster on Tesla. On Shop and on Boeing. The other thing is rolling. Like I've been trying to teach you guys, when you make a whole bunch of money on something, you can, and it's continuing to fly up, you buy another call further out the money and you sell yours and you lock in more money, more gains than what you ever even bought on the roll, and then you can't lose. And then you're not emotionally attached to the roll, and you don't trip when that thing takes a fat pullback. You stay in it, and then maybe you make way more because you did. The majority of the time, if you play the charts, you get rewarded for having strong hands and playing the charts, because as long as it holds, like I'm usually willing to let something gap down 2 times before I'll get out, or 60%. That's my rule. If something goes down 60%, I usually will take a loss and get out. So it's all up to you how you want to do it, but rolling up and rolling down are huge. I rolled down on Tesla last week on a lot of calls and it saved my ass because I was expecting Tesla to easily get up to 650, 700 and it didn't. I knew that those calls would never come back. So what I did is I sold all of them while they were down 50%, and I rolled all the way down and bought as many contracts as I could just with that money on the 600 calls. I rolled down to give myself a shot at actually making money instead of just watching them never come back and hoping that I can get to even. Does that make sense? Whoops. Hold on. Yeah, one second, give me a second. Alright, sorry dude, I accidentally got logged off for that thing. But yeah, rolling is huge. So once you learn the art of the roll, not only will it make you more money, it will save you from more losses and turn your losses into money by rolling down closer to the money wherever the price of the stock is. That's everything I got. If you guys have any questions, let me know. I'd be happy to answer them right now, and then I'm going to get back to my weekend.
I think I'm good, man.
Okay. Well, hey, dude, you have fun out there in Puerto Rico, man.
Yeah, I'm doing a lot of construction out here.
My wife already said that you better get used to us coming out there.
Man, no, dude. We met for a reason.
I know. Yeah, it'll be fun.
Be exciting, man. Well, I'll talk to you guys later. Have a good weekend.
All right, you do the same, Ron.
Have a good one.
Drew, you got any questions?
It's pretty good. I'm still trying to grow my account to see how many contracts I have. How many usually do you buy at one time?
So again, it doesn't matter. I try to buy my contracts in groups of 4 if it fits within my position sizing. It's not about how many contracts you buy. It's about playing the same amount of money every time. So every contract's different. So if your play is $1,000 every time and it's a 5-cent contract, that means it's only $5. So that means you could buy 20 of contracts and it only costs $1,000. Now on the flip side, you might be playing something that's $10, which means it's $1,000. Then you should only play 1. So it's all about positioning yourself at the same size every single time. Now, if you can afford it, the greatest way to play, period, I just call it like the rule of 4, is if you can buy contracts in multiples of 4, if you can afford to do that, it's the greatest way to play because you set levels mentally in your own head of where you're going to sell. So I buy in 4s and I go, okay, once I'm up 30%, I'm selling a contract. Once I'm up 60%, I'm selling a contract. Once I'm up 100%, I'm selling a contract. Now my last contract is totally covered, plus more. Plus, even if that thing goes to 0, I still have made some money. Now I'm no longer emotionally attached to that thing and I let it run. And your runners are where you make the biggest gains that you've ever had in your life. So that's the only way that you can leave a runner is if you have multiple contracts. If you're only buying 1 contract, then your risk is a lot higher if you're trying to hold for those monster gains. You've got to lock in gains quicker for the fact that you're only playing 1 and it gives you a disadvantage.
Awesome. Yeah, that's great. Okay, all right, then I'll up my contracts on Robin. But yeah, Robin's a great out platform. He's all I get.
Yeah, the only thing that sucks, man, on Monday and Tuesday, like, it used to be bad with having issues, platform issues and not being able to buy or sell. But it's been great for almost like a year now. And what just happened the other day, I don't know if you saw, but on Monday and Tuesday, man, it was tweaking out and you couldn't get in and out of plays. Like, thank God everything that I was in was just going up because there was a solid, like, 2 hours where I couldn't sell nothing and I thought I was just going to get destroyed. But that was the first time that's happened in like a year. So I'm really hoping that that's done and over with. I know somebody that works there and I know that they have like nobody as far as employees. They run a skeleton crew and they've been raising money forever to IPO. So as soon as they do IPO, I know that they're going to bring on way more staff and we won't ever probably have to worry about outages anymore. But on the same token, every single broker has outages. Everybody I know that uses any Morgan Stanley, TD Ameritrade, whatever, every brokerage at some point has outages just based on the volume of people that are on using their app.
Okay. Yeah,
So,
they probably just have just a one-time thing.
yeah. But anyway, any more questions from anybody on here? No more questions, Drew?
I got nothing.
Okay, man. Well, you have a good day, brother, and I will be chatting with you guys Monday morning.
All right.
All right. Take care, guys. Enjoy your weekend.